turning your attention to historical analogies, as it may provide a bit of optimism in today's environment following the collapse of Silicon Valley Bank. And I'm referring to the October bank panic of 1907, which has some certain similarities to today's crisis. The 1907 panic was triggered by the collapse of a major regional bank, Knickerbocker in New York. The collapse hit two other regional institutions and then threatened to spread to the major banks. However, the 1907 panic fizzled relatively quickly when JPMorgan made a stand, and the market hit bottom within about 3 weeks. A similar stand was made this past weekend. Of course, it remains to be seen whether history will repeat itself, and I'm not saying the market will bottom in 3 weeks. However, the market does appear to be closing in on a bottom, and many equities are starting to offer some good upside potential. So, let's take a look. And today we're going to take a look at one chart, which is the iShares Russell 2000 ETF. And as you can see in the upper left, the symbol is IWM. And this is the 20-year monthly chart. And we're looking at this simply because I think this chart shows basically what's happening in the market better than the other indices, because you can actually see the struggle happening. And we'll take a look at that in a second. But first of all here, simply the price chart. You can take a look at back here, 2003. Into the bottom of 2009, bottom of 11, the bottom here in 16, the bottom there in 2020, and then the current bottom, which seems to be taking a little bit longer, and that's just fine. But drawing the line, say the bottom trend line looks like this, and right now that looks like a decent upward curve. So I've got a lot of confidence that we may be seeing the beginnings, or actually the beginnings of the end of the bottoming and basing for the current market. Let's go down and take a look at the oscillators. First, we have volume, which is not showing us too much, but it looks decent. But here, the major oscillator, the MACD. You can see that struggle in the fast line here, where there's been a couple of attempts to move on up, but it's been reflected back, it's failed. But definitely, it looks to me like a bottoming and basing is occurring, such as we did back here in 2020. Now, in 2020, that particular bottom was a V-shaped bottom. We don't have a V-shaped bottom. We have more of a U-shaped bottom. Nonetheless, I think we're bottoming and basing, and I think soon we're going to see the bottom, so be prepared with your cash. Going back here in 2009, that was also a longer term bottom and basing that took quite a while. So the actual fast line here moving through the slow line looks different in these three different bottoms, but I think you get the general idea. This one here, we're having some struggles, and that definitely is showing up in the fast line. And we'll continue to have some struggles. There still is a separation between a fast line there and the slow line here, but we're near that zero line. So we do need that separation to lessen somewhat here in the next few months. But watch closely, because it is happening. And you can see that here in the histogram for sure. Definitely bottoming and basing. We've been improving for months. Now, we came up to this point here and we're getting reflected back down, and that's totally healthy. We got reflected back down, say, in this move here, the bottoming basing in 2008, 2009, and you can see various reflections back down in other time periods. But definitely, we're getting reflected back down, but I don't think it's going to be significant. Maybe a month or two, or maybe a little bit more. Just keep your eyes on it, because it is evolving in a progressive manner. Same thing here in the price rate of change, definite sawtoothing, but we had the move of the fast line above the slow line, back down again, but we'll continue sawtoothing as we move sideways, and then sooner or later the fast line is going to pop through and stay above the slow line and then move on up, and that's when your market's going to be moving. You can also see this here in the RSI. It's only at a moderate 40.57, but definitely from this point back here you can see the improvement continuing, and I think we're going to see that continue to improve until it moves above that 50 or midline. Same thing, stochastics. You can see the pain in that bottom. Now, the basing is going to take a while longer. These banks aren't going to settle things out this weekend or next weekend, but just keep your eye out. Keep stacking that cash. Time is actually getting short, as you can see here in the last oscillator, the Williams. Once again, definite improvement on the way up through there. Now, the fast line came back down here into that oversold territory, but it's going to sawtooth back on up. It's already gone above that 50 or midline, and it's going to do it again. So start looking for those opportunities that are out there. I'm going to be bringing more opportunities as I see them, but each and every one of you can be taking a look yourself and finding your own opportunities. As you see, this price chart looks real nice for the most part. It was difficult here in this last year, but at least with regard to the stock market, the clouds are starting to separate. So look for those opportunities. And for today, that's ChewDog Charts. Thank you.